Afternoon and good evening to all. Myself Vaibhav. In today's session of Visual JForex, we will be continuing our algorithm development using the indicator pivot. This is the third and the final part in this series, and in today's session, the focus is going to be on completing the sell side of the equation. In last two sessions, we had seen how the underlying logic is going to function using this indicator, and in the last session, I had also completed the buy side of this algorithm, how we can go on to execute the trades for the buy side using these formation. Now let us head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. So the development so far includes this instrument subscription where the Euro USD is being used as the instrument of choice. After that, this position amount was defined at zero to make sure that there is no existing pending or open position on the account prior to the execution of a new trade. This pivot block has been added with the candle period of daily, and also the time period for this calculation is daily. So we are utilizing this formation of the daily pivot series to figure out some key levels which we will utilize to look for the profitable trading opportunities. And as I said earlier, today the focus is going to be on the finding of opportunities to go short. To look at the price volatility, price action, we are also relying on the get historical candle. These of daily candle period, and the latter two are of hourly, and these remaining two are of 10 seconds each. To define certain conditions where we need to make sure that the difference between the current day's candle high and low is more than 10 pips and less than 20 pips, we had carried out these two calculations. And to define the stop loss and the target price, we are also taking into consideration the difference between the resistance central point and the support level. So these calculations were used last time around, and this here the high and the low difference is being calculated. Then on the lower side we have this formation in place for the execution of the buy trade. I will not go into the details of it. You can refer to the earlier video if you want a brief refresher, or if you haven't watched it, I would recommend that you go back and watch it, and after that you can continue with this one. Now there is the Euro USD hourly chart, and here I have plotted the pivot series for the daily candle period. We have this central pivot point, which is going to be a key marker for the execution of the trade. Above it, we will be looking for the opportunities to go long, and below it, we will be looking to go short. So that is the classical interpretation of the pivot series, and we are sticking with it. Now, for the sell trade to be executed, we want the momentum to be bearish. So as I said, we need the last hourly candle close to be below the pivot series. That is going to be the most basic requirement. And also we want the trade to be executed once the momentum picks up on the sell side. So to make sure that is the case, we will be looking at the last hourly candles closing and the opening price levels, and the closing value should be below the opening price. So that means the momentum has turned bearish. And to make sure that it is happening after recent correction, we will also consider the penultimate candle, and it should have closed higher. The penultimate candles, hourly candles closing value should be higher compared to its opening value. Pardon me. And in the last hour, the momentum should have shifted on the lower side. So these are going to be the three basic requirements in terms of price action as well as the pivot series. And along with that, we have to consider the difference between the support and the central point. This difference will be used to define the stop loss and the target price. We will place the target price, which will be equivalent to the difference between the central point and the support, and half of it will be taken as the stop loss level. Now we head back to the Visual JForex platform. Okay, so the First thing we will have to do is get the calculation done. We will have to find out the difference between the central point and the support. For that, I am going to consider new calculation expression blocks. We will deduct the first support level, which is below the central point, to figure out the difference. Okay, so there is going to be a1 minus a2 sell side target price difference. We also have to convert this difference into integer data type. Prior to that, we will take this difference and we will divide it by 2. We had defined this variable last time around with the value of 2, which is going to be the dividing factor. So here it is going to be a1 divided by a2. Okay, sell side stop loss difference. Now we will define the final variables of the stop loss and the target price later on once we get in the trade command block. Now we have to components. We will start with defining the conditions. So the last hourly candle close needs to be considered. It should be below the central point. So I will have to consider the candle 18th candle close. Candle 18 has a look back period of 1. It is hourly. And we compare it to the central point. Okay. First input less than second input. And now let us consider the closing levels of the candle 18 and candle 19. We need the candle 18 candle close to be below its opening price. So we have to compare candle 18 candle close with candle 18 candle open. Okay. Here, this should be first input less than second input, whereas candle 19 should have its closing value above its opening value. Candle 19 candle close should be above candle 19 candle open. Okay. So this is going to be first input greater than second input. Now we will have to set the conditions for the difference of the daily candle, the closing value and the, sorry, not the closing value, the high point and the low point difference should be within the predefined range. So for that, we are going to use these two more of the blocks, and once we are done with that, we will need two more to set the condition for the execution of the trade. So these are the two requirements, two limits, lower limit and upper limit of 10 pips and 20 pips. And we have to consider the actual difference. It should be more than 10 pips. And less than 20 pips. So here, this is going to be first input less than second input. And now that we have defined the conditions for the hourly formation as well as the daily candle, all we need to do is go for the execution of the trade whenever the price starts to drop below the price level of last hourly candle close. So we have to now again take candle 18 candle close and compare it to the closing values of these candle 20 and candle 21, which are 10-second candles. Okay, so all I am going to do is take candle 18 candle close as the common input in both of these if blocks. We now have to compare the candle 18 candle close with candle 20 and candle 21's closing levels. Candle 20 has a look back period of 1, so its closing value needs to be lower, whereas candle 21 was the penultimate candle and its closing value will be set on the higher side. Okay, so here first input less than second input, and we will have to define this as the first input greater than second input, and after this comes in the trade command block. Open at market. Okay, now prior to defining of these input variables, I will first arrange these blocks in place on the lower side. It has become too cluttered to understand the flow. Okay, so this formation, as you can see, is symmetric. We have equal number of blocks in place on both buy as well as sell side. Now let us define the input parameters for the trade command block. Default instrument remains as it is. Trade amount I will change to 0.1 million. Slippage 2 pips is good enough. Stop loss and take profit. Now is the time to create these variables anew. There is going to be a new variable named SSL. Okay, we'll name it SPP. We had carried out the calculations to look at the difference. Now this difference is in double data type. We need to change the it to integer data type. So for that we have to multiply it with the 10 raised to the power 4. So 2 more of the calculation expression blocks are needed. This is the take profit difference and this is the stop loss difference, and both of these difference needs to be converted into the double data type. So for that I will use this pip conversion factor, which has the value of 10 raised to the power 4 as a multiplier. So now it will be a 1 into a 2, and here also a 1 into a 2, okay. Now coming to the output values, I will assign the stop loss variable here. So this value will be derived from this calculation, and the take profit here. Okay, so our take profit is equivalent to the difference between the central point and the first support, and the stop loss is half of it. Now let me join it to the multiple action, and as soon as I joined it, now you can see all this iteration flow has been color coded to pink. That means the trade flow is going through till the very end. And with this, our formation is complete. I hope you have been able to understand the logical as well as the execution part of this algorithmic structure using the indicator pivot series. And if you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. For further coverage of the market developments, you can also check out the Dukascopy Analytics page. We are also available on the Facebook. And for carrying out the testing on the historical data, you will also need to take the help of JForex platform. All the links have been provided on the description part of the video, so you can access all these various platforms provided by the brokerage house. So thank you all for joining in. See you next time. Till then, goodbye.